Hello and welcome to the Stock Planner channel. Do you recognize this guy? Today I'd like to talk about MITK. It's a facial recognition software program company, and it's a leader in that niche, facial recognition. It has and had enormous run up shortly after earnings, and I want to take advantage of that situation. Do you recognize this guy in the bathroom holding a cat? MITK's software would. This is Stock Planner channel, and we're about sharing some ideas. We're not your advisor or anyway making a recommendation. I'm just telling you what I'm going to be doing today or at the open on Monday. This video is produced on the weekend, but I would appreciate a like and subscribe. Never take advice from somebody on the internet wearing a bathrobe holding a cat. Let's get started. The job of a swing trader is to find these tops and bottoms and capitalize on them, if that is a top. This thing can still continue to go on up. To do that, you use indicators. This particular indicator is a zigzag. It's not an indicator at all. It looks to the future to draw these lines perfectly. And so I call it a visual indicator. It helps me draw my fib lines and to identify the tops and bottoms, perfect tops and bottoms, and then find indicators that lead up to that as well. The three indicators that I use are MACD. When the MACD crossover, zero lag MACD crossover occurs above the zero line, that's an indication of taking a trade. But I use it to see if the MACD is above or below the zero line. If it's above that's I'm in position for a short, a regime change, catching the tops and bottoms. I'm looking for these changes. And likewise, the stochastic RSI, when it comes back around the 80, and when it comes back around the 30, it goes above it, and comes back around, that's what I'm looking for. It goes above it, comes back around, I'm looking for it. And I'm looking for the MACD to be above or below the zero line, and I love to look at when it's way above. I love that. Those are three indicators I use, and so we got looking at MITK on a daily time frame. And we had this long run up and a gap. And when you see a gap, even though it's a small gap, these gaps tend to fill over time. Let's zoom out a little bit. See this a little better. This is a relatively cheap stock, trading currently at $22. So basically, you have to ask yourself, is this thing going to, based on the indicators that we've got, the MACD is above the zero line, which tells me that should go short the next time when it has a regime change. We had just had earnings. Looks like the stochastic is going up and getting ready to come around, and the RSI is way above the 70, and which is an indication that may have a regime change. These are all early singles. We don't really have a single. It just indicators that maybe this is overbought, and the RSI, the stochastic RSI is overbought. Maybe this was an overreaction to the good news in the earnings. And then once the good news subsides, maybe the stock price will come down to the 50%. 50% is at 20.53. 20.53. Now, if you have a small account of $5,000, trading about $1,000 at a time, a $20 stock, you can trade about 20 to 25 shares and short the stock. I'm thinking it's going to go down. If you disagree, I'd like to hear your comments below. All right, let's take a look a little further on the fundamentals of this stock. We acknowledge that doing swing trading is primarily a technical indicator type thing, looking at indicators and probabilities and numbers and charts. People use candlesticks and things like that, technical indicators. And I think it's 75% technical and 25% fundamental. But I think to be a good trader, you have to know a little bit about what you're trading. So let's dive into that quickly. Again, trading at $22, going to 23 or 24 bucks. That's $2 for a cheap stock. It's covered by 4 analysts. That's pretty cool, and it's a strong buy. This is tip ranks. It's got an 8 overall ranking, and our technicals and everything looks pretty good here. The fundamentals are a little off, and the insiders have sold shares. Looking at FinBiz, to the moon. Target price at $22.13. It's already there. Profitable, optional, shortable, and has a buy or a strong buy. MITK Systems third quarter earnings and revenues top estimates. That's great. Optical imaging industry, as I said, facial recognition. That's a leader. Who knows what the future? But I think it's bright. And I think it's bright for the next 10 years of this decade. Short term, though, I think there was an overreaction to the good news. Looking at Simply Wall Street, they're saying the third quarter, the revenues were up 25%, net income up 120%, profit margin up. Those are all good numbers. That's what you want to see. Earnings have increased about 95% per year. Perfect. According to Simply Wall Street, MITK is 21% undervalued, and they have it at 28.12 as a fair market or future market value. Back to the charts. All that is very, very good for this stock. But I want you to look at something. Spread this out just a little bit. Since June, this thing has leveled off. Been trading in a range. And suddenly, the news hit, and everybody wants to be in. This might last a couple days, and then it'll fade. I can short now, but there's a better way. What if I could show you a way to have a winner if this stock stays below 23.18, right about here? 23.18, right here. If it stays below that by September 17th, you'll have a winner. Let's take a look. Using a free tool called Option Strat, we look at a bear call spread, which is basically saying, hey, let's go short on this. And we'll expire this deal on the 17th of September. Currently trading around, I just refreshed my screen, 17th. Currently trading at 23, 22, and we're going to be slightly above that, 22.50. We're going to sell a call and buy a call. We have to put $250 up, of which we'll get a credit of $70, and our max loss is 182. And if it goes down to 21 somewhere in here, and in the next 15 days or so, we can take about half the profit there, which is $34, half the credit received, and close out the trade. I'm in this to be in about 15 calendar days, and taking half this credit, putting up $250 at my margin, and risking about 182. Not the best trade, not the worst. As long as it stays below 23.18, I've got a winner. And of course, I could hold this all the way through. Now, in those same 10 days, it does not go down. It goes up. I can close that trade for about a $50 or $60 loss. Win $68 or $70, or taking half of that early, or closing it out for around the same amount of loss or a little more, and be done with the deal. Going back to the chart, as long as it stays below that line, it's a crooked line, but you got what, 23.18 by mid-September, and that's assuming it might go up a little bit and then come back down. The further it heads down, the better I am with this. That's the trade. Is this something you do for $70 or $35, risking about $168 to make $35 to $70? Well, it's something. That's the risk you calculate. The risk everybody takes in the stock market. Counter to a lot of people's opinions, stocks don't always go up, and this is overbought, and I believe it's going to fade. What do you think? Please like and subscribe. Leave your comments below and tell me if you like this trade or not. Max loss of 182, taking in 68, maybe closing it out in a few days, in 10 to 15 days for a $30 or $40 win. If it goes down, what do you think? Leave your comments below. As I said before, like and subscribe. A lot of people don't cover this stuff because it doesn't get a lot of clicks or views. But I'm not interested in all that, although I would like to have a few more subscribers. Really, I just care about making a little money, steady and repeatable. Happy trading. Catch you on the flip.